test of controls handout. And the whole idea of this class is that things are more hands-on. In the past, we used to do like a mini audit in this class, which was actually very good, but we just can't do it in a shorter period of time. But anyway, so test of controls, about half the class was the audit, and the other half was in the book. Anyway, test controls, it kind of give us a kind of a glimpse into, first of all, the test of controls that are different than, say, dollar testing, but also kind of give us a feel for kind of the internal controls over purchases, whether they are for inventory or maintenance parts or property, plant, and equipment, whatever they are, kind of going over the controls for that. And let's see here. And then I don't think we have much to finish up in the chapter 12 and 13 handout. So I think next class, tomorrow, I'll send out a chapter 12 and 13 exam. Let me see what the classical sampling. Well, we'll see how far we. So this will be let me do this. Emailed, and it will be due Friday of next week. Be a week to do it. And you can ask me questions about it. Okay. Make that a nice red color so we all know. Okay, so this is what we're going to do. By the way, I don't know if I talked about this in the other classes, but you can always turn in stuff late. If you haven't turned something in and say, okay, it's past the due date, you can still turn it in. Your grade's going to look bad until it gets turned in, but you can still turn it in all the way up until the last day of the term. So don't think this is because the time has passed, you can't turn it in. So late work is accepted and it's not penalized. Like I say, it's going to look, your grade is going to look ugly until it gets turned in, but after it gets turned in, it should be fine. Okay. So I'm trying to get in. No. All right, let's go to test of controls. I sent it out in 3 formats. The Excel format, the Word format, and the PDF. Now, what we're going to do is we're going to go through and kind of walk through testing out these controls, but I just want to show you something on the if you're using the Word document or the PDF file, or here if you're using the printed one, the last page has kind of the summary of what we're going to do for these. So you can enter them right on that last page as we go along. So you can actually pull that last page off if you'd like. It might make it easier to use, but the last page of the handout has the kind of the checkoff for each one of these. All right, so let's go back to the. I don't think this is in the. Let me see. Is this in the handout? I don't think so. Oh, it is. Okay. Yay. All right, so we're going to go through. This is a kind of shortened what you might find for a test of controls for purchasing, and this kind of goes through all of them, but it kind of breaking it up between a few different departments, just to kind of give you a feel for what the controls are for them. So the first page here is what you'd have as far as a part of the audit plan for testing controls. Now, testing controls are different than testing for dollar amounts because they test basically the control. The dollars, while you might test some of the dollars, is really not the purpose of it. It's to see if the controls are working. So we look through here and we'll see how this works out when we get going. We have three different, basically three different departments. And those departments are the maintenance department. They order things for maintenance. The purchasing department, they're the ones that actually buy the stuff for the company. The receiving department, they're the ones that check it when it comes in. And I guess you could call this a separate department because we are actually going to talk about it, and that is the accounts payable department, and we will see what they do and how they do it. Okay. So let's go ahead and let's jump right into sample number one. And again, if you're playing along at home or in the classroom, that last page, nope. The last page of the handout has where you can keep track of all the tests. So this is where you put, yes or no answers for sample one, sample two, sample three, whatever. So we're going to sample 5 different groups of purchase orders and invoices and all that stuff. And when we're done, we're going to get some kind of feel for what the controls are of this place. Can I see the screen? So if you have the last page on there, and in the class we want to rip it off, that's fine too. Or if you can do it online. I'm using the Excel just because it's going to fit on my screen a whole lot better than, I can't put the 2 up there. We don't have 2 screens on it. So anyway, so let's go to sample 1, and we'll kind of walk through it. As we walk through this, we'll get familiar with it. Okay. All right, so how do you get something into a company? The first thing you do is you make a requisition. There are actually 2 requisitions that you'll have in companies. The first requisition that I'm going to talk about is for requisitioning something to order. The second type of requisition is something that's already in the plant and you need to get it. You might have to requisition that also and tell them why you need it. So for instance, if you wanted a, whatever, you wanted some welding supplies, you have to requisition that. Even though they have it, you may have to requisition it to get it. But this is a requisition going to purchasing to get something. Okay, so let's take a look here. Okay, and by the way, these take a long time. These aren't like the dollar testing stuff. These will kill a good day or a week for you. You're actually doing it. Okay, so here's a requisition. Items are here, the bearings MP. I do have a note on the first page that we'll look at right now. Let's zoom in on this. All items with the prefix of MP, MG, MV are considered approved items. So when we see this, we're trying to kind of simplify this a little bit. So there'll be an approved items that people can actually order. You don't want somebody ordering a Ferrari or something. So there'll be approved things so that people can, or what people can order, and there'll be an approved list. So we're going to assume though that anything with the MP, MG, MV prefix are okay. And that's for maintenance production, maintenance general, and maintenance vehicle. And we'll get to the bids here in a second. Okay, so let's take a look here. So here's a requisition order. And it's signed by Amy Anderson. Now we got to see if Amy Anderson, let me read the first one. Requisition order is signed by an authorized employee. Okay, well, Amy Anderson does look like an authorized employee. The requisition order is for approved items. It is. Now you gotta be a little careful with this though, because you also have to be careful that coming over here, that Amy Anderson is actually approved for ordering those items. And it looks like she is. Okay, so Amy Anderson is an authorized employee, so I'm just going to put a Y here. These are all going to be yes, no's. One or the other, like flipping a coin. The maintenance order is for approved items. I think they were. Let me check MP. Yep. And last but not least, the requisition order is dated before or at the same time as the purchase order. Okay, well, we gotta look at the purchase order. Okay, so here is the date of the requisition order is February 17th. Oh, geez, I missed Valentine's Day. Oh no. I think of an excuse now in 3 days. All right, so coming down here, the purchase order is dated a day after, so that looks like it's okay. What would be the problem if if the purchase order was before the requisition? How would that be a problem? As far as the control activity, what would be the problem with that? Anyone? Suppose you had a purchase order that didn't have a requisition. Why would that make you uneasy? It could mean that people in the purchasing department are just ordering stuff. So the matching of a requisition has to be signed before the purchase order is gone. Not necessarily for the people in the requisitioning department, but because of the possibility that there shouldn't be a purchase order should not be able to be made without a requisition for it. There's actually there's a little bit of variation for that, but I'll talk about later. But for the most part, unless it is done beforehand, I'll tell you right now, unless it's an emergency. If it's an emergency, a plumber shows up, says I have to have a check or else I'm leaving. It's 3 o'clock in the morning, the place is flooding. There are leeway for that, for those sort of things, but generally speaking, you have to have a requisition order. Okay, so yeah.
Why should it get fed if the purchasing order comes for the requisition order?
One more time?
Asking why should it be a concern if the purchase order comes before the requisition order?
Because the requisition, the purchase order should only be for those things that are actually, a requisition will actually state why they need it, basically. And those should come before the purchase order. You can have the purchasing department ordering things otherwise without a requisition order. It's actually more of a control issue that it shouldn't be able to be done. You shouldn't be able to make a purchase order without a requisition order. Now, if you look here, this is probably the way most companies would do it. Requisition order for a 371. If you come down here, the purchase order becomes purchase order for a 371. So they should have some kind of a tracking system for the requisition orders to become purchase orders. And if you don't have a requisition order that you can't put it through, that would be an ideal control. The purchasing department is probably in many companies the most vulnerable for employee theft of any of them by far. they can order things. They have approval to order things, and if they're getting kickbacks or something like that, it's very difficult to find. So we really try to lock down the purchasing department. Not because, and for two reasons. First of all, it is a very vulnerable place in the company, but also if you give somebody an opportunity to do something, it might cause them to do something they would not normally do. So if they don't have the possibility of doing it, hey, you just taking away that, you kept a good egg from turning bad. So, one of the reasons why you do controls, and one more thing I'll add into that. One thing is to keep away that temptation that, opportunity is one of the parts of fraud. And, that another thing though is to protect those people that are actually working in the department. So if someone says, well, I think that these purchasing people are taking things by making purchase orders that are, not approved, they can say, no, you can't do that. It also does help protect the people in the department. A lack of controls, if you don't have that control and something, and there's purchase orders being made, you don't know what's going on. Everybody becomes suspect. Everyone in that department becomes suspect if they don't have those controls. Okay. And I've seen whole departments get fired before because they didn't know who was doing what. All right. Then you're in court. All right, so let's go on to the purchase order. So the purchase order, let's see here. Purchase order is signed by an authorized employee. Okay, let's see here. Who signed it? Darnell Brooks. Okay, now. Is Darnell Brooks an employee? He is an employee. And is he authorized to work with MP item numbers? Yep, he is. So Darnell is authorized. He's authorized to work with the MP numbers. You can say a yes for that one. Purchase order item descriptions match the requisition. Yeah, they do. What you want to be careful of is possibly someone could mask something, they're getting something other than what they're actually ordering, or something's being ordered other than what they're asking for. By the way, this is purchasing department. I got 8 things down here. I was looking at one of the last ones that I was using when I was working at Navistar, and it had 32. It had 32 steps to it. We boiled it down a little bit. Purchase order items quantities match the requisition. Yes. A purchase order is dated before or at the same time as the receiving report. We got to go down to the receiving report to see. Oops. Okay. Receiving report. The receiving report is on the 25th. So yeah, it's definitely after. And of course, and the problem you have with that is something might be received when it wasn't ordered, and then they back through and go, oh, well, let's make a purchase order for it, even though it never went through the process in the beginning to be approved. Again, unless it's an emergency, that's a no-no. Order was sent to an approved vendor. Okay, here's the approved vendors. This sent to All City Supplies. All City Supplies is an approved vendor. And they are, looks like they're for production. So that would be a yes. Oh, this here vendor. Hey. Okay. The purchasing department employee is authorized to purchase from the vendor. I think we said yes before. That's production MP, yes. The items ordered have at least 3 competitive bids. Now this would, if they're on a one vendor, a single vendor for a lot of things that are normally bought, oftentimes what they'll do is they'll have competitive bids for a basket of goods. And here are the competitive bids. And All City looks like they were the top among 3 competitive bids. And that's why on this first page, for one-off things, it's good to get at least 3 competitive bids if you can. The reason is obvious. Why? Why do you get 3 competitive bids? There's actually 2 reasons. Why is it important to get competitive bids? Why is that a control?
For 3 different situations.
One more time?
For 3 different situations.
Well, yeah, you're looking to see, well, first of all, you're trying to get the best price. So what you may have to do is a basket of goods that you buy a lot of, and you might get bids from different vendors that would all supply those things, especially things that you buy a lot of, things that are the usual items. They may have hundreds of items in their catalog, and you may pick a handful of them to get bids on, and you won't tell them which ones you're looking at. But you get to see which suppliers you want to go with. You may have a kind of a competitive, a basket of goods and say, what would you give, what are the prices for these things that we need? It also, one of the things that can happen as a purchaser is you choose one bidder because you can get kickbacks from them. Oh yeah, how about that? My brother-in-law won well, he's the only one I gave the only bid that we had. So another reason you do it is to try to keep from having those kind of situations occur, that you have people who are maybe at least tempted to do something like kickback. Kickbacks are really hard to find, by the way. Why? What's the problem? A kickback is like when someone pays you, okay, I'm a purchasing agent. You want this contract? Yeah. Can you help me out if I give you this contract? And so they say, yeah, well, we'll kick 1% or 2%, whatever it is. Why is that hard to find? It's a lot harder to find that than someone pulling money out of a cash register. Why? If you have a vendor kicking back $1,000 to a purchasing agent, why is that really hard to find as opposed to someone taking $1,000 out of a cash register?
Is it because everything's electronic now?
Well, yeah, and you gotta remember that kickback never went through the company. That was never received by the company. It's not in the company. The cash register, people say, "Hey, what happened to the $1,000?" And yeah, it'd be electronic most likely nowadays. And so money that has actually come into the company is much harder to, or I mean, it's much easier to detect money that actually came into the company rather than money that hasn't. There's no way, they're gonna show up and hand them a bag full of money on the job. This is gonna happen offsite. The company's never gonna see the money, never know that the money changed hands, most likely. So it's very difficult to find things like kickbacks. And so when it comes to getting competitive bids, it's very important to have that because you don't want somebody funneling bids to one vendor that might not be on the up and up. Okay, let's see here. Where did I look at these? Purchase order items are at the approved prices. Okay, looks like they get a 5% discount on the list price, whatever the list price is. And here's the terms they have. We'll get to that later. Okay, so let's take a look here. So here's the prices. We'll probably do a quick calculator. I'm almost positive these are all. Yeah, so these are all at 5%. So these are actually going to be the prices that we have. Actually, these are the prices we're going to have. They've taken the discount. Here's the list price. They've taken the discount off. So the purchase order is at the list, at whatever the agreed upon price is. Okay, so yes. Okay. Let's go on the receiving report. Receiving report is signed by an authorized employee. Demon Park. And it is. And by the way, in the receiving department, a lot of times they won't have specialized, because I guess they could, but they really can't control who shows up with a truck. So yes. The items on the receiving report match the purchase order. Okay, this is how this kind of works out. Here's the items on the receiving report. And they should match with these up here, and I think they do. Now, the receiving is very similar to the purchase order with two big exceptions. The first being these quantities will all be blanked out. So the quantities on the receiving report will be blank. Why? Why don't we want to have if they ordered 30 of these, why don't we have 30 on the receiving report? Why do you think? Some got damaged, some got shorted, they didn't have it, they could be all kinds of things. And you want them to count them. They have to count it. If these are blank, it comes in, they have to count it, or else it's not going to go into the system as them receiving it. So I forgot what they're 35 and 40. Let's put those back in. So we want them to count, to count them. And so those will be blank. Whether it's electronically or paper, those will be blanked out. They also won't have the dollar amounts or anything like that. They don't need that to count them to see that it was received. So you're not going to get all this stuff on the receiving report. They don't need it. The quantities, prices, all that stuff, they don't need. They just need to count them, make sure that whatever was sent was received. Or whatever was ordered, I should say, was received, or were there not, Yeah,
We changed that one.
did I? What was it? Oh, wait, yeah, right. Oh, I did. Thank you. I don't, yeah, see, that's why we have that blanked out, is so that someone like me. Was stupid of me. You're absolutely right. All right. All right, so was they counted? It looks like they were counted. And the receiving report is dated at the same time as after the same time as the purchase order. That actually is a yes. If it's a yes up above, it's a yes here. The reason you put that in is that it might be for the same, people might be looking at the test of controls from the receiving department versus the purchasing department. Sometimes you'll have redundant testing too to make sure that that the first one is correct. You'll have duplicate ones in different scenarios. Okay. So let's take a look here. Accounts payable. The item quantities on the vendor invoice match the items in the receiving report. I find it different. And well, they do now. So here it looks like they ordered 40 of the bearings. Is that the only one that was? So the bearing seals were shorted, what, 15? And that's not that uncommon. It's not ideal, but it does happen. So we have to make sure that those are and we want to make sure that those are at the correct price too. The price on those should be 76 cents each. So 76 times 25. 19. That looked funny to me. Okay, so that is the correct amount. The item prices on the vendor invoice match the prices on the purchase order. Well, we know that the bearing seals do, and it looks like these other ones do too, because they have the same amounts, don't they? 461.90. 461.90.
It doesn't.
It doesn't match because the quantity is different. You see this? This is what they ordered 40. Now they only sent 25. And again, that's not unusual. It's not unusual if they don't have them, they'll send what they have. If they don't have 40, we only got is 25, they'll ship the other ones later or something. So there's nothing wrong per se with this. However, the invoice should reflect the lower amount that were sent. This shouldn't be an invoice for 40. This should only be for 20. And this is why I kind of did the quick multiplication, 25 times the price of 76. We want to make sure that they're only, hey, oh, I know, it's probably going to get it. So if we multiply these out, we want to make sure that they're still charging us the price that they should be charging us. So this $19, this is, this is how many they sent. They sent 25. And so this $19 is actually what they should have, and that is what they do have on there. So it looks like everything's on the up and up on the, at least on the invoice. Payment was approved by an authorized employee. Well, there's only one here, so that would be Kelly Fulmer. Now, I know that this is kind of like the accounts payable. Vouchers payable and accounts payable are very similar. A voucher payable is a document that shows that we have all three things together, and I want to put that on there just to kind of show you. The three things that we have to have before we pay anything, we have to have a purchase order. So I'm going to put that down here. This is for we have to have one, the purchase order. Let me be a little more specific about that. The purchase order. No. One is a purchase order. Two, we have to have a receiving report knowing that we received it. And three, we have to have the vendor invoice. And the invoice will have the price on it. So we need these to have these three things before we will pay whatever it is. The voucher assures that those three things are actually there. So once this voucher is in the system, it gets paid. It's approved and it gets paid. It'll flop into the system and say, okay, the next time we run checks, we're running one for all city supplies for 628.05. And that's when they cut the check, either electronically or a paper check. And that's what it has. It has their invoice number, our purchase order number is usually on it, and the amounts. Oops. Oh, one more test. Payment was made within the agreed upon payment terms. Oh, yeah. See, this is why we have this written out, so remember. The terms were net 45. So 45 days from what? What do you think? What are we in? Is it 45 days from?
The vendor invoice?
Probably it's going to be from our receiving report. And the reason being is, you know, when they cut this invoice, they probably cut the invoice the same time as they ship it. You know, they ship it, they cut the invoice. Okay, we shipped it. But for us, until we receive it, we're not going to pay for it. And so, you know, most likely it could be from the invoice, vendor invoice, if there's some agreed upon thing, but generally speaking is when you receive it, you have 45 days to pay for it. And did they? Oh no, it's not on there. Oh, wait, it's down here. It is down. It is there. What are you guys saying it's not on there for? Right there. So 322. We've got it on 225, so that's within 40. So this is actually a yes. Oh, wait, I didn't do this one. Oh, yeah, I did. We talked about it. I just put it in. That is one item in the sample. And yeah, so what we're really looking for is to see if the controls are there and that they are working. So, you know, it's a little bit different than, say, just looking at the dollar amounts. If this was a test for dollar amounts, you know, like for instance, we're going to do some of the testing for dollar amounts later on, the classical sampling stuff. If you're just looking for the dollar amounts, you would just look at the 640, you know, test out these numbers, that's all you'd be looking at. Is a 640.59 correct? And whatever was, whatever was off by that, that's what you would, worry about. You would do none of this other stuff though. And two, notice that another thing about internal controls is even if they're not being followed, it doesn't necessarily mean that there is a misstatement, a material misstatement. It could be they just don't have strong controls, but that everything is, okay. All right, let's go to sample 2. Now, the nice thing about sample 1 and sample 2 are it looks like they're similar. We have Amy Anderson, MP, so we know that she is authorized. And by the way, as you go through these, even though the first one might take a really long time, as you go through them, you get used to it. Okay, it looks like Amy, she's authorized for the MP stuff. Well, here. Signed by employee, yes. Amy. Approved items, yes. Dated before at the same time as the purchase order. Yes. Okay. Purchase order signed by an authorized employee. Darnell Brooks, I think was he the same one as the one before? I think it was. Yep. Let's do. They match the description and so do the quantities. Looks like they do. They match the description and the quantities match. That's a yes, yes. Purchase orders dated at the same time. Oh, before or at the same time as the receiving report. Create. Yep. Purchase order was sent to an approved vendor. I think all cities was the same one as before. Now let's look back just to check and make sure we already checked that. All cities is the one from before. Okay. Purchase order department employee was authorized. Yep, it's part of production is Darnell's job. So yes. They have at least 3 competitive bids. Yep, already been through that. And the art of approved prices. Now that we have to check. So they're supposed to get a 5% discount on those. Yep. Yep. Yep, yep, and yep. We'll combine all those yep, yep, and yeps into one yep. Okay. Okay, let's go down to receiving. Continued reported by an authorized employee. Park, we remember that from before, so it's a yes. The items in receiving report match the purchase order. Receiving report has account of purchase order items received, yes. Now, notice it doesn't say that they match the purchase order, because they might not. And in this case, they don't. See the quantities? So I got 5 bearing mounts instead of 10. And receiving port is date out there at the same time as a purchase order. That's kind of a redundant one. And that's redundant one, kind of like number 4 for purchasing. And again, sometimes you will have those redundant ones to make sure that the people are telling you the right answer and all that. But kind of as a backup, that everything is being tested as it should be. Okay. The quantities on the vendor invoice match the items on the receiving report. No. Okay, so this is our first real kind of hiccup in the problems. So the receiving, so they still have, there's only 5 counted, but there's 10 in the quantity. Item the price on the vendor invoice match the prices in the purchase order. They actually do. And this one, I mean, they shouldn't for that one as far as the quantity, but the price is the same. Was approved by a authorized employee. Yes. We're gonna come back to this one in a second. I'm gonna finish out the testing. I'm gonna come back to it though. Kelly. Payment terms was in, I think, 45 days. So 315 compared to, oops. Yeah. Okay, now, what is the real problem with this one?
I think, no, we are paying almost the same amount for next time to deliver.
Yeah, definitely. We were paying 40, we're paying for 10 and we only got 5. So that's definitely a problem. Dollar wise, it's probably like what, $25 or something, 24 or something. Dollar wise, it's probably not that big a deal. I mean, if this was just simply a test for the dollar amounts, you would still mark that it was off. But it's probably not enough to make a big deal out of. But there is a big problem with this. And what is it? It's a control problem. It comes down to here. What's the problem with it? The biggest problem with this is the check was actually written. It was actually written for the incorrect amount. That's the internal control problem with this. The dollar amount is, $24 or whatever. Probably isn't that big a deal. But the real problem with this is that checks can get written when the quantities don't match what's on the receiving report. And, the question is, why don't they match? And it would be different also if somebody were to fix this, someone said, no, this isn't right, and they wrote the check for a lesser amount because of it, you know, whatever, 2470 maybe? I don't know.
The total should be something around 900.
I'm sorry?
The total should be something around 900, but it's written 1,000 complete.
Yeah, so let's see, 10 times. What is each 10? Oh, 9.
Because the total manufactured gives us something around 900.
It was like, yeah, it'll be increased by 10%, whatever it's off by up here, it'll be off by 10%, yeah. Because of the tax, you'll be paying taxes on something you shouldn't have bought in the first place. And so this is the real problem. You know, this is, yeah, you're right, it would be around 1,000 something. Yeah, a little bit change, yeah, and this is the problem is not necessarily the dollar amount. The problem is the controls. Now you have a problem that you know that a invoice that is incorrect can get paid. And now it's a big can of worms, because now you know, okay, here's one, but the question is how many more times it. Okay, let's go ahead and take a break and we'll come back and finish this thing. Say be back at I wonder if is my thing working? Hey, it is. My thing here is working. So this is what we have so far. It's hard to get these, it's hard to make these fit. You know, I remember when we used to do them, it would be, you know, you have like 30 of them going across and you have hundreds of them going down. These were absolutely massive spreadsheets. And, you know, like you couldn't print them out. They had to look at them. We would print them out. We print them out in sections, but it wasn't very useful that way. Okay, so let's say be back at what time is it? 7:06. I'll put it back here. Okay. All right, wait, am I on? I guess I am. You didn't think it, okay. Let's go to, we should probably finish these up pretty quickly. Am I late? I am. Okay, so we got, let's go to sample 3. And this one, we have a new operations person. Mohammed. And let's see, this is for MG. I guess maintenance general. Mohammed is a and it is for approved items, MG. So we'll do yes and yes. And the denominator before the yes, it looks like they're cutting the purchase orders the next day. Oops. So this will be a yes. All right, let's go to the purchase order. Signed by an authorized employee. And it looks like also for those, the correct goods. Match the items in the description. By the way, anytime you're doing these testing, there is a certain amount of boredom you gotta bite off. See how many, but the time you see, 30 of these, you're ready to. But you gotta kind of make sure that you're alert enough to find stuff that happens. Same quantities as a requisition. Yep. Dated on or before the seen report. Yep. Approved vendor. New time clean. Looks like they're an approved vendor and they're approved vendor for the goods that they're being ordered. And while we're at it, we'll take a look at those bids. They got 6 of them, so apparently that's a fairly competitive market. Okay, so why are you beeping at me? Oh. Okay. Approved vendor, yes. The purchasing department employee is authorized for those purposes. Yep, the MGs are for has those items ordered have at least 3 competitive bids. Yes, we just looked at that. First order items are at approved prices. List minus 10. Okay, well, check and see if that is $2.10 less. Yep, 14 cents less. Yep, that would be 34 left. Less. I'll do that. Put that one in just to check. That one is correct. Okay. Looks like those are all. All right. Let's go down to the receiving report. Authorized employee. Bill Bethke. There's a Bill Bethke. Bet it's the same one. All right. I know you can match the purchase order. There's a count for items received. Looks like they do. They're the same. And that's a duplicate test. It's the same as we have for purchasing. And again, that's not that uncommon. It's not unusual at all to have sometimes duplicate tests because it'll just to make sure that everything is super important thing. Okay. Item quantities match the items in the receiving report. Yep. And again, you don't compare it to the purchase order. If you see on the CPAs and they ask you, do you match the purchase order? No, because you may not have received all of them, and now we know why. You know, the receiving report might have a different one on there, and there's nothing wrong with that actually, but they won't necessarily match the item prices on the vendor invoice match the price on the purchase order. Do they? They don't. You know, it should be exactly the same if these are all the exact same quantities and they don't match. Why?
Missing the discount.
Yep. You'll notice the second and the third one, the LED lights and the switches, those two are at the same price. But if you look at the gallon of Cleaner Go-Go, we know that $21 is way too much for Cleaner Go-Go, but it looks like they didn't give us the 10% discount. They just said 5 times 21, so there's no discount there. So that is a no. Payment was approved by an authorized employee. Yep. And was it made within the dates? What are the dates for this? Net 30? Yeah. This is net 30. So this is a let's see. So we received it on the 21st. On the 21st of April. Oh yeah, easy. Okay, those are yes. Okay, now. So this one. Again, what's the problem with it? It's not the dollars. Again, it's that this got paid. The incorrect invoice got paid. All right, let's go to Number 4. Signed by Mohammed. We already checked and Mohammed is authorized. That was the second one was. Approved items. Anything with an MG is approved, so we'll say yes. Requisition order is dated on or before at the same time as the purchase order. See, we don't have any crazy stuff going on in the purchasing department. So that's a yes. And we move on. Purchase order. Purchase order by an authorized employee. Yep. Purchase order descriptions match the requisition. Yep. Purchase order quantities match requisition. No, good. No. So here are the quantities. And you'll notice that Muhammad ordered 8. They ordered 10. Why? It's actually on there. Why did they order 10?
Each pack comes in 5.
Yeah, they had to order multiples of 5, for whatever reason. It's now here's the thing. You could say, okay, let's send it back to Muhammad and have him correct that or whatever. There probably should be something in the description or something that says you have to order multiples of 5. But at the same time, you gotta remember this is a business. You gotta keep the doors open and you can't, what you don't want to have happen and send it back. All of a sudden, hey, there's no lights in the cafeteria. Why? We didn't get anything back, So sometimes they'll just make that correction, and they seem to have some leeway as far as doing things like this. And again, in a perfect world, yeah, they should know that they have to order in multiples of 5, and maybe they have to update the system to do that. But a lot of times, they just change the purchase order to what they can order, and if they need 8, getting 10 in means that they have at least 8. So they may go ahead and do it. At the same time as before the receiving report. Yep. Sent to an approved vendor. Yep. New Time Clean. I remember that name. Wait a minute. I missed that one. Okay. Purchasing department employee was authorized for the purchases. Yep. These 3 competitive bids, yes, we already went through that one with them. And purchase order generated approved prices, to check. 10%. The same items. The same items we had before? No. Oh, well. All right. So let's go down to. Wait a minute. Okay. Authorized personnel. Bill Bethke. Yes. Items match. They do, and oftentimes the receiving report will simply be the purchase order with the quantities and dollar amounts blanked out. Quantities blanked out so they count it, dollar blanked out because they really don't need to know. Receiving report has count of items received. Yes, and it looks like no red safety paint, excuse me, but they were counted. Receiving report is dated at the same time, yes. Okay. Coming down here to the invoice. Yeah, it looks like we got the same problems before. Let's go through the steps though. No. Item prices on the vendor invoice match the purchase of. Oh, they probably do, but I think it's the same total. Check. 94.50, 12. It's a yes. So I'm an employee, yes. Payment terms 45 days. Check was at 7/23. 28 for the so yes, that was like 25 days. Okay, so this one, again, we have this problem. Okay, now you know what the fun part about auditing is you get the really wacky one. That's what number 5 is. These are the ones that just brighten up your day. Okay, requisition order. Authorized employee. Terry English is in. Yeah, but you did the wrong thing. This is a general, so Terry should not be ordering that. It's possible someone's, that Muhammad's on vacation or something, but not giving any other information, we kind of have a mismatch here. No. It's for approved items. No, MGs are approved, so we'll say yes on that. And the dates are fine. Purchase order assigned by an authorized. Yep. Descriptions match, quantities match. Dated before the receiving report. Yep. An approved vendor. Yep. Yes. In order to have at least 3 competitive bids, we already went through that one, yes. Approved prices, 710, 70, 70. 680 minus 68. Yeah. Okay, the receiving report. Roll. Signed by an authorized employee. Yes. Bill. Names on it, match. Yep. Count of items received. A glaring no. Yes. There's nothing there. Okay, let's come down here. Hey, what happened? Uh-oh. Um, item quantities on the vendor master receiving report? No, there's nothing on it, so those do not. So there's another no. Doesn't really matter. I mean, it should be 0 for any of them, but we can look at the prices, I guess, and say, okay, yeah, it looks like the pricing was okay. Although 0 times anything should be. Payment was approved by an authorized employee, yes. And within the 45, no, 30 days. Okay, so here's what the summary should look like. I'm gonna go ahead and highlight the no's. And what we're going to do is kind of figure out where might the problem be with this? What is the overall? So you're looking at these no's, there's a few of them. This one, the quantities didn't match. We saw the note up there that said you have to order in quantities of 5 or multiples of 5. Coming down here though, there's actually one thing that stands out as kind of a glaring problem. What is it? No, I mean, obviously these things are getting paid and the quantities aren't necessarily matching. What could be the problem with that? Whenever you see something that is repeated and there's no necessarily pattern that you would normally expect it would be if something was being done on purpose. What might be the problem here? And especially the last one highlights it. Yeah, it could be that, all of these with the exception of the sample 3, which was the pricing, the pricing error. All the rest of these were for quantities in the receiving reports. It very well could be that accounts payable is not getting them. Or that they are, maybe it's a timeliness or whatever it is, that, the payments are being made on time, maybe that has something to do with it, like that if you don't get the receiving report and maybe there's a delay in them or whatever it is. But it seems like there is a kind of a disconnect here between the receiving report and the, the payments of it. So this could be definitely could be a system problem. It could be an employee that just doesn't care, but I think that's would be more unusual than anything to have that at large. Okay, so a couple things here. Would you do more tests of controls? If you're trying to do an audit, you're trying to see if their financial statements are materially misstated. Are you going to do more tests of controls? Now, remember, test controls do not give the dollar amounts. We don't know the dollar amounts. These are all yeses and nos. You probably would stop. Okay, there's a problem somewhere with the receiving reports. So you would probably just at that point stop and say, okay, let's back up and just do more testing of the dollar amounts, because we can't really rely on the controls for that. We'd like to, but we can't. There is this one for pricing that could be a problem, but the rest of these are all quantities. I'm going to go back to this one for just a second. So Terry English is not authorized to get these. Oops. This one's pointing to nowhere. Okay. Okay. So what do you notice is a little bit unusual about the stuff that Terry ordered? Terry is involved with vehicle maintenance. What's kind of unusual about what Terry ordered? Do any of those things look like they're for vehicle maintenance? I guess they might. It's possible. Maybe it's the parking lot needed. You have weed killer or something. The gloves are a little bit funny. They are red ones and blue ones. Almost look like his and hers. If we don't know if Terry's a female, but anyway, yeah. So this is one of those problems you could have, though, is that somebody is trying to order something that they shouldn't be. And I don't know if I think maybe I told you this already, but I remember when I was going through the maintenance parts at Springfield, Ohio, which, yeah, that's like the Simpsons, thing. Let's talk about that being Springfield, Ohio. But anyway, Springfield, Ohio truck assembly plant. And somewhere they had ordered 2 chandeliers. It's a truck assembly plant. Like, where are these chandeliers at? No one knew anything about them. Maybe they couldn't find them. You'd think like chandeliers in a truck assembly plant would stick out. Apparently probably somebody ordered them and, took them, I would imagine. But anyway, you couldn't find anything about them. But you run into the problem that this is why you don't let people just order whatever they want. It could be that, now these could be on the, like say maybe the parking lot needed weed. So anyway, let's go ahead and we'll send that in. Anyway, and that's that is basically what you do when you test controls. And again, you're not looking at the dollar amounts. The dollar amounts here are really small, probably I would say definitely are immaterial. But you're looking to see if the controls are good, can you rely on them, and where the problems might be. So in this case, we say, okay, there's some kind of problem between the receiving department. It doesn't look very effective. The receiving department versus the accounts payable does not seem very effective. So that's probably where you're going to concentrate. It doesn't look like there's too much problem with purchasing, which is good. you know, for the most part, maintenance, other than Terry ordering the thing here. They seem like they're, you know, pretty much ordering what they should be. But, yeah. Okay. So that is a test of controls, and those are some of the controls that we'd have over it. Save it. Let's go and we're gonna finish up. Here. And by the way, those of you playing at home, you can descend in that last page if you want. You know, sitting here, if you guys want to do that, just that last page. Okay. We're not going to get to classical sampling again. Darn it. I promise you, next class we're going to do this first. You know, it's been hanging out there for weeks, but all right, let's go finish up this one. This one shouldn't take long. We stopped at number 6. Auditor will usually recalculate the depreciation. You guys already have that. Okay. This is big on the CPA exam. Accounting for impairments of property. Oops. Testing for impairments of property, plant, and equipment. There are a few differences between the international and US standards. They're not terribly big, but it is possible to have something. This is kind of unusual. It's actually possible to have something impaired under the international standards. It's not impaired under the US standards. Because in the US standards, we don't discount the cash flows, whereas international standards do. It's not usually like that. Okay, so impairments are big. The next big thing is they can be a problem. Retirements. So something is retired. So we have the purchase stuff, kind of like the purchasing, kind of like this thing we just did. So we have purchasing, and then we have retirements. Retirements are when we get rid of something. We sell it or dispose of it or whatever it is. Why are retirements usually more difficult to identify than additions? It is more, and I can tell you from doing the audit, you know, that it is more difficult. Now we do floor to book and book to floor, so that's part of the way we can find it. But it's much more difficult to identify retirements. Why? What do we have when we buy something? Huh? When we buy something, look at all the stuff we have. We have requisitions, we have purchase orders, we have all kinds of stuff to look at, receiving reports, vendor invoices. When you're throwing something out, do you get any of this stuff? Not usually. And even if even if you scrap it, some guy comes by with some cash and hands you some cash, and you maybe get a receipt from him, but it's you don't have all this stuff. You don't have all this documentation. You don't have a receiving report. There's no receiving report if you're throwing something out or it's being hauled away. So there's much less documentation. Not there. Usually and as someone in the accounting department, someone on the floor decides they're gonna get rid of a drill press and they push it out in the alley and, someone comes and takes it and you don't know anything about it. You're still depreciating it for the next 3 years. So a lot of times there is very little documentation to it, if any. It's possible that someone, and obviously there should be ways of doing it, that if you retire something that, forms are filled out, accounting is let know, that it's gone and all that. When I was at Springfield, we had a bunch of retirements that were not documented, that were still on our books. And anything that's bolted to a building is called an attachment. So we had all this machinery that we didn't have anymore that was attached to the building, and these are property tax. We had to apply for property tax refunds back like 8 years, something like that. It was a complete can of worms. Okay. Examine evidence of property, plant, and equipment. This is usually done on site. That they should have the documentations, whether it be deeds or, the invoices and all that kind of stuff. Those are usually done on site, and I say that because people think like, well, okay, if it's a building, yeah, there'll be a deed filed and all that. Those are notoriously out of date. So you go looking for a deed and it's, it's in somebody else's name who died 13 years ago or something. Okay. Rental, evaluate the accounting agreements for property, plant, and equipment. Next page, next page. Okay, perform analytical procedures for property, plant, and equipment. This could be things like property tax. I can't type anymore. They have 5 buildings and they only have 2 deeds or something like that. Okay. Stuff's not too good. Okay, lease and rental agreements. Lessee. Long term, I should say non-current. In other words, more than 1 year. Non-current lease allegations are capitalized. If they're more than a year, they're going to be capitalized. So it'll look like this. You'll have an asset, something along the lines of leased asset. Whatever. It used to be more fun in the past because they didn't make you capitalize all this stuff, and you used to have airlines that didn't have any airplanes. I had a friend who actually worked in consulting, and all they did is go around keeping airplanes off of airlines' books. And they'll have a lease obligation. Whatever it is. So you'll capitalize it. You'll depreciate it. This is one of the few disagreements that still is there between us and the U.S. and the internationals. The internationals just say just do straight line, doesn't really matter. It's leased, you don't own it anyways. Whereas the U.S. ones say, oh no, you have all these different depreciation things you could do and blah blah blah. Lesser to another company. This is one of those things that this could be actually be not their item. Well, legally it's their item. It could be actually one of those things that is a majority of its life is going to be somebody else's. This would actually be a sale. If you lease it for its entire life, could be a sale. You know, a lot of times people that own the airplanes, they are just an investment group. They have no, they don't want the airplane back. They have no use for an airplane. Leasehold improvements. This is a really big one lately. You use the board? Yeah. Leasehold improvements. That'll be. Again, there's people at home that, yeah, things are using the board. Smoking a tea. Okay, let me see where I'm at here. Hey, the markers are all gone. Did you guys do that so I wouldn't write on the board? I don't blame you, but. Leasehold improvements. A lot of times people don't actually own the building that they're in, even if they're like a restaurant or something like that. So, here's the land, here's a building on the land. And if you're leasing that, oftentimes people will change it. They'll put, if you look at McDonald's, they'll look the same. McDonald's may not own the building, or whoever, the franchise doesn't own the building, but they'll put things on. They'll put a sign on. So this is now, if they lease that building and they attach a sign to it, they don't own that sign anymore. It's an attachment, it's a legal term. That, and it goes back, if someone attaches something to your building, you don't have to worry about it. Whoever owns that building now owns that sign. That's a leasehold improvement. So, you get some of these places like TGI Fridays and all this, they have all that stuff on the wall and all that stuff, so they all look the same. All that stuff is actually owned by whoever owns that building. Those are leasehold improvements. Now, here's the problem. The lease is say for 5 years. Okay. Let's say that Joe's the sign, the leasehold improvement, is going to last for 12 years. While these are actually intangibles, technically, they are usually in the property, plant, and equipment. Virtually all the companies have these in the property, plant, and equipment because it actually is attached to whatever the lease is in the property, plant, and equipment. So it's one of those weird things that it's actually an intangible, but because they don't own it anymore, but that it does give them, it is an asset because this sign makes people come and, come to the place. Or you said McDonald's, maybe more people come, but anyway, you have this mismatch. The lease is 5 years. The sign's gonna last for 12. How long of a time do you depreciate or amortize that over? Yep. Unless they have some kind of a, ironclad thing that they can re-up that lease. This is a 5 year, and companies in the past were doing this, assuming that they would be able to release it, and they had a big problem with that a few years ago. That a lot of these people that own the buildings were not leasing it back to these franchises and things like that. And again, all that, that stuff is millions of dollars, some of it, just really. So you have to check to see if they have leases that will actually the Yeah, well, it was actually my marker bag that did that. Bad marker bag. Oh, he's so cute. All right. Lisa, so you need to verify. Or the life of the lease, and it must be in writing, whatever that, and again, this is, whenever you get a hot topic that's, is, you know, fair game for the CPA exam, and they like to test on that. I would not be surprised if they have something on that. And it's also one of the very few intangible, it's, I think, the only intangible that I know of that's not put in the intangibles. Okay. Disclosures. The basis of depreciation. Depreciation methods can change between different classes of assets. So it is possible that they have depreciation that is different between, for instance, at UPS, maybe they have a different depreciation method for the trucks versus their buildings. What are you doing here? So the depreciation methods, they differ between fixed asset categories. Okay, asset categories. But all must be disclosed. So the basis of depreciation, and you're going to test those. Oops. It's bad when they go to spell check and they just shrug at you. All right. Anything that's pledged as collateral, we don't need to write anything in for that. If it's pledged for collateral, you're gonna make a note of it, usually. And that's very common if you buy a building, a house, car, whatever. Property and equipment not being used. Okay. Most property, plant, and equipment is not being used. Other non-current. That's it. Yeah. The one that is different is usually land. Most property, plant, and equipment is in the other non-current asset category. And by the way, if you have equipment that is not being used, it does not go in property, plant, and equipment. If it's not being used, it is not in property, plant, and equipment. It's not depreciated either. Property, plant, and equipment not in use is not depreciated. It's set aside. It's in the other non-current assets, other category, other assets. With the exception of land, if land is not being used, usually it's carried as an investment. Any questions? I don't know. I let you guys out 3 minutes early. You guys gonna go crazy, right? All right. Any questions for those? You know what? Wait, Yeah, you can see it. Okay. Any question with those playing along at home? Actually, any questions at home? Okay, we'll call it, so you can turn in the test of controls for purchases, and then we also can turn in this handout, and I'll send out the chapter 12 and 13 exam next class, and I promise next class we're gonna do classical sampling. You don't believe me, I don't blame you, but we'll do that next class. Questions?
Nothing. Have a good night.
Okay, good night.